Well, good morning, everyone. I am Don Zavis, one of the co-founders of the Second Look Services, and want to welcome you to today's call. If you are listening to us live or listening to us on the archive, we really appreciate you being here. I always like to start the call with a recognition of all the things that are vying for your attention in the world. And the fact that you are listening to us is indicative of the fact that I think you're tired of being screwed and maybe somebody done you wrong. So, Michael, how are you this morning?
I'm doing great, Don. Appreciate you asking. How are you?
It's my I'm really, really excited. So I can't contain myself anymore. So I'm going to give you about 2 minutes to set up, and then the next thing I say is going to make sense. I don't know. Did you ever remember the movie Fight Club? Right. I think everybody's seen that, right? You know, it's called classic, right? Brad Pitt at his finest. And the Ed Norton character played a gentleman who was an actuary. He worked for an insurance company. And essentially his job was to go to the scene of these grisly deaths that took place as a result of a defective automobile. And then he had to put the calculations together of whether or not it just makes sense to pay off the people. Would it cost less to pay off the people that are killed or injured, as opposed to having to rework the entire product line? Now, when I saw that, the first thing I thought is, nah, that can't be true, right? I mean, that would be the snakiest, weaseliest thing on the face of the earth. Now, I came from Detroit, so I had to connect up with some of my Detroit buddies, and I said, hey, listen, I'm sure you saw Fight Club, blah, 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 blah. That can't be true. And he's like, well, yeah, it is. Because if it's going to cost $100 million to fix the problem, and it's only going to cost $10 million to pay off the people that were killed or injured, it makes good economic sense. And I was like, wait a second, there may be other people killed or injured, and they were like, yeah, it sounds terrible, but that's the way of the world. So I'm going a long way to make a point. So I have an associate of mine who's connected into the insurance industry, big company. He's an agent, right? I'm not going to say names or anything like that. And I said, do the people that are actually the adjusters, are they working for the insurance company? Or are they working for the policyholder? And he said, well, they're employed by the insurance company, but they should be working on behalf of the policyholder. And I said, well, then why would things like Katrina or, the people that haven't been made whole that were in the fires in Honolulu, or, the terrible wildfires in Los Angeles. And I saw a thing on the news that, it's been 8-9 months and people haven't gotten a dime yet. I'm like, wait a second, if they were really working on behalf of the insurance company or, the policyholder, wouldn't these people have already been taken care of? Wouldn't they have just like, here's some money, here's a check. I don't need, you don't need to jump through 100 hoops. Here's the money, you go. And he says, well, it's actually worse. Now, when somebody tells you that what you just said is worse, is actually worse, I'm like, well, it could not be. And I said, well, what would worse look like? And he goes, they're actually paid, the little known secret is they're actually paid a bonus on the containment of the claim. Now, you're never going to hear that. There's not a name for it. There isn't a calculation. But if they're able to satisfy claims for less than what their, actuaries, bean counters, whatever, think that they should, they actually get a bonus. So, Michael, you're smarter than I am. Please tell me I'm wrong.
I wish that were true, but I do have friends who are insurance adjusters. So when you say, hey, is this for real? Yes, it really is. So you want it to be something else. And I get this. And that's why I'm glad that we're actually talking about this. Is behind the scenes, this is absolutely real. It really does come up to, these companies are public. They're publicly traded. They are on behalf of shareholders, and their stocks have to look good. So holding on to money makes them look good. Giving out money does not. So that's kind of the financial situation of the whole deal. And yeah, again, we want a different world. And hopefully by talking about this, we will get one. Hopefully there are companies out there who want to actually help the people they're serving. But, and again, I don't think the insurance companies don't want to. They just have to leverage where they're at as far as, hey, we got so many claims this quarter. How many of them had to go out? How many can we keep? It's a bunch of numbers games, really.
And I can appreciate, again, I'm a businessman, I'm a capitalist, right? First and foremost, I understand that companies have to be able to make a profit to be around tomorrow when you need them. But I think that, as we delve into this second look services philosophy, and I'm now kind of calling it a philosophy, it's like pulling back the curtain on the wizard because, again, I have insurance for me. I believe that when I get in my car and God forbid have, an accident, my wife was hit by a drunk driver in 1993. And we were really, really blessed that the adjuster that we had was amazing. She was just wonderful, came to the hospital to visit my wife, was involved with her care, really gave us everything that we wanted. And I thought that that was what everybody did. I was like, oh, okay, well, hey, the medical policy, the medical coverage that you have with your car in the event that you have an accident, it's super fantastic because that's the experience that we've had. But I've heard terrible horror stories from other people that they didn't have the same experience. Although I think that their responsibility is to pay claims, I think that they may shroud themselves on the, well, we got to make sure these claims are legitimate before we're actually going to pay them. So it's like, you're already hurt, right? Now you need to prove that you're hurt. So, again, I'm a capitalist. I recognize the value. But when I saw that and I heard that, I was taken aback because I was like, that just can't be possible. If anything, in a perfect world, they'd get a bonus for the quickness of their claim and the amount of money they gave away, right? That they were able to help all these people to the nth degree. So, our second look philosophy is really, I think, really, really expanding. And by the way, our newsletter for this week was fabulous, right? All the little, pitfalls and traps and hiccups and things like that. Again, all in the fine print, all legitimate. But you know what? I think that there's a spirit. It's like they say, when you get into a contract with someone, there's the spirit of the contract. It isn't necessarily just the words. It's the spirit of the contract. So, I mean, I was just amazed, just amazed. I think the one, Michael, maybe because I know you're more involved in the newsletter, that really, really struck me was that you didn't do enough to, how do they say it? Didn't do enough to like minimize the exposure. Am I saying that right?
Yeah, there's a due diligence that insurers want, right? So here's a real life example. Now, growing up, I grew up in rural farm territory. Locking your door literally was not a thing. Like you didn't have to bother doing that. It was pretty safe. However, if I did ever get a break-in and someone steals my stuff or ransack my house, that was my poor judgment of not locking the door. So this is what insurance companies are going to be looking for is, if your house got broken in, did you lock your door? If your car got stolen, do you have car alarm? Do you have, like on my car, there's a way to kill the ignition engine. Like without my key, there's no way you can even start the car. So that's what they're looking for. That's why sometimes when you look at these premiums, please talk to your agent about, if I do these things, can I lower the premium because now I'm less at risk? That's what they're looking for. But it is absolutely true that they're looking to you to be a smart, intelligent, resourceful person to mitigate as much as possible your risk or your exposure.
Well, and I understand that. Again, I like to consider myself intelligent. I much like you, we lived in a suburb of, Redford, Michigan. And, although we would lock our doors at night, the doors were always open in the summertime. You just had the screen door, and that was primarily to keep the bugs out, but nobody ever locked their screen door. You'd be out playing or something like that. Mom and dad will be doing their thing, and you're pounding on the door 29 times, having them unlock the screen. The screens are always left open, but I think maybe that needs to be shared with people. If you're going to use that as a potential workaround for your responsibility and payment, then I think that you should take a cause, right? Most of these big providers do maybe a weekly newsletter, or I get things in the mail just from my people, or an email, or periodic text with just marketing information and things like that. But I would really, talk about legitimate transparency. I would love to get one that says, hey, you need to make sure that you don't keep wrapped presents in your back seat. You don't want to make an attractive nuisance. You don't want to have a pile of money on your dashboard. Even though legally I can have anything I want inside my car, visible or invisible, as long as it's not rude, crude, or illegal, right? I could put a stack of money right on my dashboard. There's nothing illegal about that. My guess is if my car got broken into, they'd say, well, if you didn't have that stash of money, that stack of cash on your dashboard, there's a good chance nobody would have broken your car. Now, they're not going to say that. I think, again, that's one of the dirty little secrets of, arrows in their quiver that they can pull out. So today I'm just kind of on a tear on the insurance world, because I think a lot of it too is, my rates have continued to go up. I don't have any tickets, haven't for 10 years. Have never had an accident in my entire, 40 something years driving, and don't even drive that much. And yet my rates continue to go up. Now, I know that there's ways you could try to mitigate those down, but, it just seems like that system is skewed.
And I'm glad you mentioned that, because it was a real shock to me to come from Dallas, Texas. So I have a 2015 Acura TLX, right? It's a new car. It's about $60,000, but my insurance there is half of what it is even here in Arizona. That freaked me out. I'm like, I'm going to a place that has less people, so less possibility of even being a car accident, but my insurance for my car is double than that of Dallas, of like 5.5 million people. And I really had to dig into, like, why is it so expensive? But I think I think when you say there's a real shock to what you're paying in your premium, like, seriously, dig into it. Like, why is it so high? Is it a crime rate thing? Is it because of my type of car gets broken into the most? Like, really dig into it. It's so crazy, like all the little pieces that go into like how your premium's calculated beyond the make and model of a car.
Well, and I think, again, for transparency, that really, to me, I think needs to be shared. And I'm sure that they're in some small fine print somewhere, but you're absolutely right. Why would you go, you've got half the exposure and you've doubled the price. There seems like there needs to be something that, again, I like to think I'm a reasonably intelligent person, but there seems to be like a calculation that they could say is like, Don, you're a smart man, you're a businessman, you understand profit, you're totally on board with that, which I am, right? This is how we do it. We take the amount of people, we take the amount of loss, we take the amount of hours. Now, again, they know that. But there seems like there should be some kind of a look around, right? Again, that second look. I would love to be able to go back and say, wait a second, you never said that if I did this and this, you were going to lower my rate. I would like a refund back to the time when you instituted that program. So if you did this a year ago, and had I taken advantage of this a year ago, I would have had this reduction. I believe that you should give me that money back. I think it was incumbent upon you. That was, you see a lot of that in cable television. In our house, it's like $290 a month between internet and fax machines and, half a dozen TVs and DVRs and everything else. But if I was brand new, you would get it for $99 for the first year. Exactly the same services. I think it doesn't make any sense to penalize the people that you've had for as long-term clients in lieu of giving, special opportunity to the brand new people. So, that's what I mean when I said I'm kind of just on a tear against just the way I think some people are treated out there in the world. It is terribly, terribly unfair because the mechanism by which, especially information-wise, they can make more legitimate decisions. I think although it's there, it's certainly not in the forefront. It's there, but it's certainly not pronounced.
And I'm glad you mentioned that. Something that has really been in the back of my mind is to kind of build my own both health and auto, home, car type of insurance company for the very reason that you mentioned. Now, here's a couple of things that a lot of people don't realize about insurance companies is when they collect money, 90% of that money literally has to be given out per claim. So I want you to think about how profitable an insurance company must be as far as operations, where if I'm part of a group and I contribute to this group and someone in our group gets into either an accident, the house, gets flooded or on fire, or, you have some medical need, the group contributes to it. And again, 90% of that money goes out. But what I think you were talking about is I want to help people understand, hey, why don't you not go through like a weight loss program, but let's look at nutrition, because I think that's where weight loss really needs to focus. And I think there's many people out there who see that as well. But why not join a program and I'll lower your health bill because you're doing something actively to reduce the risk of you having either a coronary stroke, breaking a hip, whatever. And I still want to do that. Same with the car and the home. Hey, if you put security systems in, I will lower your premium. Oh, by the way, if you do this, this, and this with your windows, some of it could be, break-in glass. They're actually not as expensive as you think they are, but there's so many things to mitigate risk to where I would love to just educate people every month, hop on a webinar. Hey, let's read your policy. Here's, again, another section that says, if you do this, I'm going to lower your premium because you've set in place something to put you at less risk. Again, you can't reduce risk completely. I literally just saw a store owner with a video of a bus crashing into its storefront. I'm like, okay, there's nothing you can do to prevent that, nor could you even predict that a bus was going to go out of control and smash into your storefront. It's just, you can't plan for that. So I still want to build my own company to do that. Let me educate you on all the funny things that happen. By the way, in your area, and that's another thing with the education, in your area, yeah, crime rate's really high. And here are the things that are happening. People's carports are being broken into. People are losing, packages. That's a pretty common thing in our area. All of these things that are happening that because we get alerted to, I say we like the insurance companies, we can get that information. But again, like you said, why don't I educate my policyholders? Hey, watch out for this. This is what we're noticing. One of the things I didn't realize is there is an alert here in Arizona where they tell you, if you have this type of car, you are most likely going to get broken into because these are the ones that are being stolen the most in the past 30 days. Like, I love that this information is available, but I don't think people know it's even out there. So again, I think what we're doing here at Second Look Services to let you know all of the information out there. You probably haven't subscribed to it or you're just unaware that it exists, but there's lots of things out there to really protect you in terms of like risk. Hey, you don't want to, leave your car out during these times, stuff like that.
Well, and I can only speak about my insurance company. They do have a version of that, but I refer to it kind of as just lip service. So if you look at auto, so if you bundle your home and auto together, you get a discount. If you're a good driver, you get a discount. Now the discount itself is almost insignificant, right? But when they were promoting me to come, they were offering that good driver discount. So my thought was, okay, this good driver discount, because again, I'm much less risk for them. They should, reduce me significantly. and it was almost nothing. In fact, I get a bigger discount by having an auto debit out of my account than any behavioral thing that I would do that I would have control over. So let me just say that again. The way that I looked at this, right? And maybe I'm not an expert on the numbers, and I could be wrong. I could be wrong again because the numbers are so hard to come by. I get a bigger discount because they take my payment as an auto withdrawal. So they are more, they are more interested, or they're offering a greater incentive for them to get paid faster than they are reducing my coverage or my exposure, or reducing my cost as a result of my behaviors.
And
So
that's
again,
very true.
well, and I think what you're going to find is, and I'm doing it myself. I'm a product of the product. This philosophy that you and I have created is now kind of twining into all of my things. I remember a conversation I had a year ago with my cable company that will go unnamed, but certainly they're the one that services Oro Valley here in Arizona. So, I think you'd be able to find it. Previously I would call them and say, I'd like a better deal. And they would hem and they would haw, and they would maybe give me some superficial couple shekels and pat me on the head and send me on my way. My last conversation last week is I want a refund. I want money back credited against my account, right? Because I think that you've overcharged me and have continued to overcharge me and have concealed all of the things that you're saying that could have reduced me. No, I want a credit back. Now, I may not ever get it. I'm prepared for that. But this is the first time that I've ever asked for it. Not do I get a good deal going forward. I want them to come and say, listen, Don, your credit's going to wipe out your next couple, 2, 3 payments. Now, could that happen? Absolutely. Will it happen? Who the hell knows? But again, I think the idea, that second look, is going back and saying, not even moving forward, right? I can kind of correct the things moving forward. But I would love to be able to go back through my life and look at all the areas. I want to redo. If a mistake was made and it wasn't really my mistake, I'd like a redo. I'd like at least the opportunity to correct that. Maybe get something back out of it. To me, I think that's such an important factor, and I think that's really going to be the future moving forward because, again, people are certainly concerned about the future. I get that. But if you look at most of the unhappiness and, frustration in the world, you look in the world of politics, and there's so much animosity in some cases for things that happened 200 years ago, not even 20 years ago. People are angry for something that happened 200 years ago. And I think to myself, okay, well, I wasn't involved in any of that. No one that I know that's alive was ever involved in any of that. Was it bad? Sure. Do I agree with it? Absolutely not. But yet, so much of our world now is looking back. Kids are graduating from school and they're graduating with honors and they can't read, and colleges that you spent $200,000 to go through that you struggled to get a job that you could potentially lose to somebody that has no college. So I think that second look is really it's really kind of kicking in. It's that philosophy that maybe there is some things that happened that now that I think about it, maybe I want to take another glance at it.
It's funny that you go there because that's kind of the original reason I built Curiosity Center, which, by the way, is the other business I have. Be curious. Be suspicious on everything that you get told. Now, I'm not saying everyone's lying to you. That's not their intention. However, the lack of oversharing the things you probably need to know, that's where we're at a loss. And I'm glad that you mentioned about that honor student. It's for real. There's a lot of people now when it comes to what is your marketability is really low. And so I feel so badly for Gen Z millennials who, because I saw it, I felt it for even me. I'm Gen X. So when I left high school, I thought because I was, number 7 in my class, so within the top 10, I thought I knew everything. Man, the moment I hit college, I knew absolutely nothing. So the gap of preparedness for something of just being educated in college, huge. My gap in just learning how should I live, knowing how to balance a checkbook, like none of this was available. So I totally get that where I think we want Second Look to really help people is there's just so much out there you don't know. And it so can benefit your life in increasing your quality of life in so many ways. And that's what I hope if you're listening to the podcast, just go back to all the other past episodes and go ahead and look at the newsletters. We're just going to share all of the things that should have been shared with you, but hasn't. I mean, if there's anything that motivates me to continue doing this, is just to make sure that happens. Because I see way too many people suffering needless.
To go back on your checkbook back to 2024, right? To go back to September 8th, 2024, who were you spending money with then? Right? What money were you spending in the past year? And let that, because again, now you've got a comparative now to your time last year. Circle back around. Who have you spent money in this last year? And I'm going to encourage you. And by the way, this has also got money in. So when you're looking at your checkbook, a portion of it is the money going out. I'm going to encourage you to find out who you're doing, right? Could be your bank. Fine, you've got a mortgage. Fine, call your bank. I'm paying too much. I don't want it. I don't like it. I need to reduce my payment moving forward, but I would like to get some portion of my payment that I've already paid back as well. Now, you miss 100% of the swings that you don't take. Now, maybe your bank has a program. Maybe they don't have a program. Maybe they could have given you a lower rate, and yet they didn't for whatever reason. But I'm encouraging everyone to look at their activity over the last year. This is money coming in and money going out. The money coming in, if it's your business, if it's a company you work for or an employer that you work for, invest some time thinking about what needs to happen for you to get a raise. Don't assume that your good deeds and good work is going to stand out. People don't want that. What do you have to do? What does that company, what does that business owner cherish? What do they deem important that you can make sure that that aspect of you is front and center and very visible so that moving forward, you might be able to make more money, but looking backwards. So for example, say that you went to college, you were taking some college classes, you didn't even go back to your employer and try to get paid for that. But you did it, you got an A, it's really, really beneficial. If you go back to your employer and say, Mr. Jones, I took these classes last year, I got all A's, I've really been able to, moving forward, I've really been able to utilize them in our business. This is how. I'd like to take some new classes, but right now I can't afford it. Would there be any way that you might be able to reimburse me for the classes that I did take? And that would free up the capital that I need, found capital, in order to take more classes that will absolutely benefit my employer here. Now, the worst that could be said is no, but if nothing else, your employer is going to know you're a go-getter. So, Michael, we're running out of time here. And again, there's so much to talk about. Any final thoughts? Because today was all things insurance. Final thing you want to kind of maybe share with our listeners?
Yeah, I think the biggest thing is go ask. I'm glad that you brought that up. It never hurts to ask. Here's what my intention is. Is there a way to either get a discount? Is there the education, which, by the way, I'm glad you brought that up. I like to work with business owners on that. How to leverage that against your taxes as well, like how to use that for your employee education and get a deduction out of it. So I'm so glad you brought it up. Just ask. It never hurts to ask.
Absolutely. Yeah, no, I completely agree. Asking is critical. And again, I think my last one, again, is the exercise I'm talking about. Grab your checkbook. Go back a year, right? A year from today, right? Who are you spending? And then look out your activity in the last year, through the last year. Money coming in. How could I have gotten more, right? Which encompasses tax refunds and maybe insurance settlements and, loans from people, whatever the thing is. Whatever money that I got coming in, how could I have gotten more? And what part of that do I have maybe a look back and see opportunity on? In terms of the money going out, stop that blood flow right off the bat. How can I, call them? Too much. I don't want to pay this. I'm going to leave and go to XYZ down the street that'll give it to me for, a third of what you're charging me. How do I go back and maybe claw back some of the money that was already there? Right? This is your money. And the ROI is outstanding. So thank you so much for our listeners. If you're listening to us live, we really appreciate that. It's not lost on Michael and I that there are so many things that are vying for your attention nowadays. And we believe that the education that you're trying to provide yourself with on your financial worthiness, I believe will come back to you many times over. If you're listening to it on the archive, write this stuff down. The only way this stuff doesn't work is if you don't use it. So thank you so much, Michael. Always a privilege, my friend. And I will see you early tomorrow morning. And for those that are listening, have a great Monday, a great week, great start to the month of September. And everything's worth a second look. Bye-bye, everybody.